Hello everybody. So today I want to talk about CleanSpark. Is it a buy? Was I wrong a few days ago when I covered it? Because I think CleanSpark may be in deep value territory. This is a full analysis of CleanSpark. I went back to the numbers, back to the drawing board, and came up with a valuation and a number. So let's go through it. So CleanSpark, you can see it's only up 250% since January 2023. So since the low, only up 250%. Of course, this stock reached the 20s. So if you compare to the 20s, it's down 65%. It's down quite a bit, and people are upset with CleanSpark. And I suppose that when I made this video, I was a little upset too, because CleanSpark had this announcement saying that they're going to consider selling some of their Bitcoin. And you got to realize, for me, I've been in this space since 2015. I was making the mistake of selling in 2015. So I still have some maxi blood and some maxi habits in me. And when I hear a headline selling that someone wants to sell Bitcoin, it's a knee-jerk reaction against that. And I have a knee-jerk reaction against companies who sell. And I still think it's not the best strategy to sell, but I understand why they're doing that. They're doing that because the market is undervaluing CleanSpark so much. It's not even funny. And so I understand that the management team wants to see some medium-term price movement. I think in the long run, they would still be better off just diluting and ignoring and diluting. But the market, for CleanSpark, I think the market wants to see some medium-term or even short-term price movements. That's why they're selling. They're going to sell some of the Bitcoin now because they want the share price to go back up now at this moment. So I'm taking a second look at CleanSpark, knowing full well that they're not going to sell the hodl bag. And that's perhaps the most important thing. If they're not going to sell the hodl bag, they're just going to sell a little bit of Bitcoin as they mine it to fund their operations and namely to be self-funded, that is to pay the electricity costs. That's why they're going to sell a share of the Bitcoin that they mine each month, but they're not touching the hodl bag, so that's a redeeming factor. And they're really focusing on I think, fixing the price of the stock short term. And you gotta realize for these managers, it must be really tough dealing with Mr. Market, because all I see is, private jet bad, private jet bad, private jet bad. I cannot imagine the hate that the leaders of CleanSpark get just because they bought a tiny jet. The reason why they bought a tiny jet is because their operations are scattered across the country. Actually, the CEO went over this. It's a tangent, but the CEO went over this, saying that if they would need to go to Wyoming or Mississippi, it's not like there's commercial flights. They're not in big cities. They're in small cities. There's no commercial flights, and so they need to fly the staff. They need to fly their people, and that's why they have a tiny brain budget. Anyways, I'm not going to comment on that. Hodl bag. The hodl bag is 11,869 Bitcoin. It's just a hair under a billion. So let's call it a billion. I'm going to get into the total assets when I calculate my valuation later, because you'll see there's a little goodwill in there. And, of course, BTD doesn't believe in goodwill. I don't like that at all. So we're going to change that a little bit. We're going to change that number a little bit and recalculate it. You can see the monthly production is going up. So it's now 700 Bitcoin. And they're still growing their exahash. And more importantly, the data center portfolio is 100% owned and operated. So back in the day in this industry, they would just rent space at someone's data center, and they don't do that anymore. They own everything. And I would say that's the trend that most miners are following. So how am I going to calculate if this stock is cheap? How am I going to do it? Well, it's going to start with the cost to mine. And the latest cost to mine for this company is $34,000. Now, when you read the footnote, you realize this number represents electricity. That's mostly electricity. And they've been doing a good job at fleet efficiency, at reducing the joules per terahash. One of the things they do, for example, is they remove the fans from the miners and they immerse them in this fluid that makes the miner much more efficient. All of them, so many miners do that. Not all, but many miners do that these days. Their cost per kilowatt hour is definitely not the cheapest in industry, right? Mara is much cheaper than that on cost per kilowatt hour, but they have much newer miners than Mara. So it's all about this balance for a miner. And of course, the Bitcoin mining difficulty it has increased ever since that number was calculated, right? When that number was calculated, we were at about 108 T in the difficulty. We're now at 121. So the mining difficulty took, quite a bit of an increase. And of course, the more the mining difficulty increases, the less you mine. And that is the challenge with mining. And that's why this equipment becomes obsolete really quick. So the key thing, first thing to calculate is what is the cost to mine the electricity while taking into account the depreciation of the miner. And that is a tough one to calculate. So from the 10K, looking at the 10K, they tell you in the 10K, right, that the direct cost to mine, and that's September 30 of 2024, so we're going to need to adjust that. The direct cost to mine, including direct energy costs, is $39,900. So $40,000 is the direct cost to mine at September 30th. Now, the energy cost itself, the electricity cost itself, was $21,500. So the electricity cost increased because now it's $34,000 because of the difficulty. This has everything to do with the difficulty. It takes longer to mine a Bitcoin. It takes more electricity to mine a Bitcoin. So what I'm going to figure out, walking through this 10K, is looking at the depreciation and other, and the other is mostly like cost to finance and some accelerated depreciation schedule. But the depreciation and other, the way I'm calculating is $18,500 per miner. Now, from listening to the latest CEO interview, I know they use straight line depreciation, 3-year. I mean, some of it's accelerated, but most of it is 3-year depreciation. And also, for following the space, I also know the answer to this question. Do miners become worthless after 3 years? And no, they don't. Miners are not worthless after 3 years. In fact, Mara, and that's the whole playbook of Mara's operations, is that miners are not worthless after 3 years, and you can still mine with them. They just happen to be way less efficient, but there's things you can do, new firmware, updates, there's many things you can do to keep extending the life of these miners that have been fully depreciated. And so, per Mara, and Mara uses Bitmain too, per Mara, you can probably extend the life of a miner to up to 7 years, and of course the efficiency towards that last year is not very good. So I am now going to calculate the cost of the miner. So the cost of the miner. So anyways, I meant to say not the cost of the miner, but the cost to mine. And the cost to mine, in my view, is going to be $43,250 is going to be the new cost to mine to me, because I'm using the updated electricity price to mine 1 BTC, the last data they give us, and then I'm only adding 9,250 of depreciation and not the full 18,500. In other words, I'm counting half of that as a true phantom expense as far as we are concerned, because we know full well that the miners retain value even though they are fully depreciated. The accountants think they have no value, but in all actuality, you can still keep mining them for at least another 4 years. So I think it's fair for me to use only half of the depreciation as the true economic cost of mining that equipment, plus the 34,000 in electricity. So the total price, the true cost to mine, as I call it, is 43,250. That's my true cost to mine. So now let's go and let's attempt to even calculate a true economic PE. And you can see it right here, but I'm going to walk you through it. So they mined 700 Bitcoin in March. The difficulty will go up, indeed it will, but the hash rate, their hash rate will also go up, and you can see they are 42 exahash right now, and they aim to have somewhere halfway through the year, they aim to have 50 exahash. So the hash rate goes up, but the difficulty goes up too. So I'm going to assume that the 700 Bitcoin that they did in March, I'm going to assume that it's going to be flat for the sake of simplicity. So if it's flat across 1 year, that means that the instant 12-month revenue is 700 Bitcoin times 12, and I'm also assuming the price of Bitcoin stays flat at 84K. So the total 12 months revenue instant is $705 million. Now, what is the true economic cost to mine? Remember, I'm using half of the depreciation that they have in their 10K and the current electricity cost. And I'm assuming that electricity cost is not going to go up too much perhaps a positive assumption, but I'm also assuming the price of Bitcoin doesn't really move, which is perhaps a very pessimistic assumption. So all in all, I think it equals out. That would mean the true economic cost to mine this 705 million, that would be 363 million, the true economic cost. This gives us a 12 months true economic profit of $342 million. $342 million for our true economic E, right? This is not an earnings, because remember, depreciation messes up your earnings number. This is not an earnings, this is economic profit. So 340 million economic profit. Now, what's the P? What's the price, right? What's the price of this company? And on this channel, of course, I use enterprise value because today we have, the internet and stuff, and we don't need to only use market cap because it's the only thing available. So let's go. Let's calculate the Bitcoin adjusted price, or the true economic price, as I'm going to call it. So the market cap is 2 billion right now. The liabilities, so their debt, their total debt is 758 million. And feel free to look at what makes up the liability right here. Okay. So you can pause the video and look. And then the assets of this company without the Bitcoin is 1.7 billion. And so this is what I include in their assets, right? I include everything but goodwill. There's no way I'm giving them any credit for goodwill. This is a big debated issue in accounting. But no, you don't get. BTD doesn't give credit for goodwill, and of course the Bitcoin. I'm excluding the Bitcoin because the value of the Bitcoin is not current here, right? That's on December 31st. They actually have more Bitcoin now. So total assets is 1.7 billion. So total assets 7.7 billion, liabilities 750 million. And then money. How much money do they have? i.e., how much Bitcoin do they have? They have 11,869 Bitcoin times 84,000 of Bitcoin. That's almost $1 billion of Bitcoin, 0.997. So what's the Bitcoin adjusted, right? BTD, that's me, BTD adjusted enterprise value. So that enterprise value is 101 million is what I'm finding. It's 101 million. And if you're a goodwill type of guy or girl, you would get a negative enterprise value, right? If you think like an MBA, you would get a negative enterprise value. So I get a positive enterprise value still, kudos, very, very undervalued, but not negative, but very, very undervalued. But anyways, at this point, might as well be negative because the true economic price to earnings ratio is 0.101 divided by 350 million, which gives you a 0.29 PE. This is way too cheap. This is way too cheap. This company is essentially trading for free. This is way too cheap. And so I'll conclude with this. Is it a buy? I consider it a buy right now. I'll have to see when I allocate to it, but I want to grow my position on this. I consider it a buy right now. And let me conclude with this, the dilution, the elephant in the room. So as you know, whether it's MicroStrategy, whether it's Bitcoin, I believe in dilution. I think dilution is great. I think you should dilute to hold more Bitcoin. But the miners, I've been under attack by traditional Wall Street. Like there's no other ways to say it. Like a traditional Wall Street hates dilution. Like people are finally starting to get that MicroStrategy can dilute finally, and still many people don't get it for MicroStrategy. So imagine, as a miner, how do you get the market to understand that dilution is a good thing? Because it's very convoluted, right? You dilute in order to invest in the business, in order to mine Bitcoin, in order to hodl Bitcoin. So how many degrees of freedom do you have between this train of thought? Many, many more than the ones for MicroStrategy. So the market is like, well, no, you should not dilute to invest in your business. I guess the market doesn't understand that the CleanSpark business is a business that's going to mine Bitcoin and not a business that's going to mine fiat. And I believe it makes sense to dilute if you're going to have a business that mines Bitcoin. I believe it makes no sense to dilute if you have a business that mines fiat, but the market sees CleanSpark as a business that mines fiat. This is why they are shifting to self-funded operations, selling a share of their Bitcoin to pay for the electric bill. I mean, there's no other way to say it, right? Because depreciation is a phantom expense. So the electric bill whatever's needed to be covered by selling Bitcoin, they will sell Bitcoin for production. And we saw they have roughly a 50% margin, so they can sell some of the Bitcoin to pay for the electricity. Very disappointing to me as a long-term investor, but as a short-term investor, I understand that the stock has been through so much pain, and people are excited, and it seems to be working, because I'll give a kudos to Rex Finance, right? And this guy knows miners. He's really good at mining stuff. Anyways, I listened to the last CEO interview on his channel, right, at the Jones conference. Anyways, I listened to the last CEO interview, and scanning the transcript. Let me show you this part, right? Go to 20 minutes in this interview. They haven't issued shares. They have not issued shares in the prior quarter. They have not issued shares in the prior quarter. So next time they report, I fully expect this to be flat or roughly flat. I don't know if they mean ATM or if they mean, RSU type stuff, but I fully expect this to be roughly flat. And if this is roughly flat, I think this is going to be a big deal for the stock price. Mostly because the narrative may change from, oh, they dilute, to now they don't dilute, now they're self-funded. It's very sad that it's come down to this. It's very sad that Mr. Market doesn't understand, and it's come down to this. I still think over the long run, this is a suboptimal solution. But right now, this stock is so cheap, and I do understand why they are doing it. I get it. So anyways, this is a stock I'm going to be looking to add, and on Patreon you'll know, of course, when I add to it. So anyways, this was not financial advice, not investment advice, just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.